Today, we're joined by Seth Yakatan, a veteran dealmaker who's raised over $1 billion in capital and led 22 successful exits. With 30 years in M&A and capital markets, Seth has been in every kind of startup scenario. And more importantly, he's helped founders win by playing where others won't. In this episode, Seth shares why the best investment opportunities live where no one else is looking, how to read market trends before they become headlines, and why trust, timing, and brutal honesty are the real currencies in deal making. We'll also explore his current obsession with the cannabis industry, how LinkedIn became his superpower, and what it really takes to underpromise, overdeliver, and exit strong. If you're raising, building, or selling, this conversation is a masterclass you don't want to miss. Let's get into it. I'm here with my buddy Seth Yakatan, and Seth and I were catching up pre-show, and I think we're going to have an interesting conversation today. But Seth, thank you once again for being on the show. And to kick it off, what got you interested in the intersection of humanity and technology?
I was at my desk at Union Bank in like 1996, and at that point I had a computer and an MP3 player and a cellular phone and something which you might remember called a PDA, or like personal digital
Oh, those
assistant.
Palm Pilots? Yeah.
Yeah, and a bunch of other things, a camera and a pager. And I was like, wow, wouldn't it be cool if this was all in one device? And then like 10 years later, they came up with this thing called an iPhone. So looking at that and trying to figure out, how human health would intersect with all of that was probably what got it started. I think it's probably where it started.
It's a good space. Like, where do you see, technology aiding in life science? And then additionally, like, how has that, your thoughts progressed since the mid 90s to today?
I think technology has really helped us as a species to understand and diagnose several disease states. So if you look at the four major oncology, disease states, and things like Alzheimer's and cardiology. So in neurology, oncology, and cardiology, in the last 25 years as a species, you've logarithmically increased your capability to diagnose and assess those disease states and arrest progression. I don't think we've gotten great as a species to cure a lot of those things, and I think there's a combination between the way that pay or payee economics work on Earth that prevents us from doing that. And then I think there's also, I'm sure someone much smarter than me has come up with this, paradox of as a species, there's whether it's a god or a higher power or just whatever, there's some things we just shouldn't figure out or shouldn't know how to do. So whatever that limit is, what it's called, maybe we could call it, the human paradox or whatever. But I think there's also a rate limiting step there in terms of the complexity of disease and the complexity of species and the complexity of genetics across species makes it really, really hard to arrest that. And so, I think no matter how much time and money you pour into it, you might never be able to cure some diseases. And it's made me focus away from life science in the last 10 or 15 years into other markets, which I think are more interesting. So
Interesting. What has your focus today then?
it's largely the recreational cannabis market. It has been for about 3 or 4 years now, maybe five. And yeah, I still do things in direct consumer marketing and wellness and human health. And I still do things in life sciences. But for me, just the opportunity that exists there from a vertical market has been enormous. And I've just dove right into it. So it's been really interesting for me.
It's a fascinating market, right? Like, because you're turning something that was a controlled substance, like the legalized nature movement of, turning something from a criminalized activity into decriminalizing, then to medical, and then to recreational has been like a paradigm that they've laid out across the states. And then this market is both, has a nationwide push and is entirely regulated at the state level. And so there is no like interstate kind of like commerce going on. How has that impacted your like either investment theses, or how are you looking at this market?
I think all of those reasons are why I'm interested. So I came at it from a life science perspective. I came at it from a human health perspective. So in 2011, I started a company to try and develop effectively small molecule mimics of cannabis that were created by the guy who discovered THC, a guy named Raphael Mechoulam. So I went to Israel. I licensed 3 molecules from Mechoulam, and I tried to get them developed as FDA-regulated therapeutics, because I was like, gosh, this, looking at all the data and looking at all the anecdotal data, I was like, gosh, this plant has so much medicinal power that no one's figured out how to harness yet. And if I could figure out a way to take a $6 pre-roll and turn it, and that we sell it at a retail store, and turn it into a $70 pre-roll that I sell at a pharmacy, boy, I'm going to get rich. Way too hard. Way too hard. And, then when I saw the growth of the cannabis market and the relative lack of any significant institutional capital, institutional advisors globally in the vertical, I said, gosh, if I've been selling dreams to pharmaceutical companies for the last 20 years and doing well at that, can I sell products to CPG companies and do better? And kind of made the shift, and fortunately for me, got involved into extremely large companies and just kind of took off from there. So it's been a lot of fun. But to your point, the lack of regulation or the lack of consistent regulation, essentially makes every market its own market. And you have to look at your thesis and how you're getting involved based upon the individual constraints and vagaries of each market. That being said, you have 5 or 6 markets that are, north of $1 billion. California's 3 to 4 billion. New York's approaching 2 billion. Missouri, New Jersey, and Ohio are each $1 billion. Illinois. So, when you're looking at $1 billion markets in a state, and you don't have J&J and LVMH and, Unilever and Nabisco, in there, and it's me, I'm like, okay, well, maybe there's a shot, right? So it's been interesting.
And also just the general trend, and no matter where you're looking at the political climate in the United States, there seems to be support for rolling out places, or at least not interrupting this space. I guess the other question is, what's your exit? Like, do you think J&J is going to, enter in and then decide just to buy up each, companies in each state to get their distribution?
Well, the investment thesis that began in 2014 was that that's what's going to happen. You're 10 years into the cycle and that hasn't happened. So my thesis is that that will happen in the next 10 years. And I think we're seeing what I call seams or cracks where that's occurring. I was drinking a beverage, cannabis, hemp, delta beverage is the hottest space on the planet right now. And the growth that you're seeing from cannabis, whether they're cannabis derived or hemp derived beverages, is phenomenal. So I do think that in the next 2 to 3 years, you're probably going to see some significant, Bev Alc CPG crossover into that vertical. You've begun to see it, but I think you'll see a wave of M&A if regulations become more clear. I think the catalyst event that you're going to need to see in order to have significant movement into cannabis is the moment that you can list a plant touching company on NASDAQ. And
Yeah.
I don't know which of the federal regulations, whether that's Schedule 3 or safe banking or some combination of that, makes that happen. But when it does, it's game over. Because again, you're just talking about M&A metrics and numbers, right?
Yeah.
Cannabis is a $30 billion industry in the United States that's growing at a 12% CAGR. Alcohol is a $300 billion industry in the United States that's growing at a 2% CAGR. Do the math, right? You could say
The numbers that I see on recreational use as far as cannabis goes, it's
it's mental.
more people are using cannabis on a more frequent basis than they're drinking now.
Correct. And when you just look at things from a private equity perspective, discount the fact that it's illegal, you have a market that's growing faster than your other, wellness, CPG, pharma, bev, alc, right?
Yeah.
Insert another one there. And they're spending as much or more in terms of share of wallet for cannabis as they are for all those other verticals. But cannabis is only penetrated in like the mid-teens relative to US population, and those other verticals are penetrated in the 60s to 80s. So again, like what's my thesis? My thesis is I have a giant market that's growing super fast, that's growing faster than all the entrenched markets that you're not in. We call that private equity. We have an industry to buy things like that. It's called private equity,
Yeah,
right?
yeah.
So it's just a matter of that light turning on. And I've been on this mission to find amazing companies, and I keep finding them. And I think we found each other on LinkedIn, and I post on them all the time. So I've been on a crusade in that industry, and talking about the intersection of technology and humanity, right? It's been spurred by LinkedIn, right? My technological footprint has been logarithmically or exponentially increased because of my LinkedIn presence and because of my commitment to be a loud voice in this vertical on that platform.
What were going back to some of like the healing qualities of cannabis? What were some of the things that really drew you in as far as the that side of it?
There were probably two things that were both. One was pretty well publicized, and the other might have been less well publicized. There was a group out of the East Coast called the Stanley Brothers who created a product called Charlotte's Web that was a tincture that was very high concentration CBD to low THC ratio, and they had amazing results with that product in young children with epileptic seizures. Same time, there was a group out of Israel that was called Tikkun Olam that was doing the same exact thing. Except what Tikkun Olam did was, in order to get permission from the Israeli Ministry of Health to distribute cannabis, they sent out a 45-page survey to their patients, and they had 90,000 patients. And they compiled all the data from the survey, and they came up with 6 or 7 indications where their product had benefit. And they started to run a series of phase 2 open label trials. So Tikkun Olam sponsored 7 open label trials in Israel. One of the most notable was in an area called Alzheimer's agitation, where anecdotally, in about 30 patients, they had almost complete suspension, address, remission of Alzheimer's agitation. And it was that work and that study that really kind of turned the light on for me, where I was like, wow, okay, there's something going on here. And what I had done from 2000 until about 2011 exclusively was start and create and try to monetize, therapeutic companies, therapeutic drug discovery companies, either small molecule or biologics. And I did pretty well with a couple of them. So I was like, no one's here. Everyone's here. No one's here. I'm going to go here, kind of a thing. That's a strategy that served me pretty well for a long time. And those two contemporaneous events are what really kind of drove me to get involved.
Like I've started a few companies myself, and I think moderate success. But at the same time, like you just mentioned something that I find interesting, where you're like you saw where people were at, but then saw where people weren't. Now, how do you make the determination that where people aren't is a place that you want to be?
I'm 54, so I've been really looking at capital markets from a professional basis, to be candid, since I was 20. So I've been doing it for 34 years, okay? And I kind of see, and I've looked at a lot of different industries, so maybe 7. When I was at Union Bank, we looked at 24. So, I've kind of seen these in a micro industry, a macro trend start to develop, where especially in technology enabled companies, where something will occur and a company will be formed, and then 3 companies will be formed, and then a year later 10 companies will be formed. So I kind of call that a cohort, right?
Yeah.
And you saw it in AI, you've seen it in offshoots of AI. There's not a slide deck that I see now that doesn't have AI in it, right?
Yeah.
There's a couple of other areas I've seen it recently in like battery metal recycling, and now I'm seeing it a lot in hemp beverages or cannabis beverages. So you see these cohorts appear, right? And what tends to happen, at least in what I think the better technology enabled, whether it's biotech or computers or tech or data, you kind of see one company pop up or one paper be published, and then a company forms, and that company might quietly raise money, and then three more do, and then four giant venture funds start the same thing, and then everybody rushes in. In life sciences, that progression is kind of a lot easier to find, and in I think in some when you study a vertical market, it becomes pretty easy to find. I think I'm my own best analyst. So if someone comes to me with a company that I've never seen or a technology, application that I've never seen, the very first thing that I'm going to do is I'm going to research who else is doing this. Right? Where else is there's got to be another company. Who else has raised money doing this? And when I go somewhere and I say there's white space, like there's nobody who's doing this, or there's very few people who's doing this, my thesis is that if I can be one of the first three or four people in the cohort, then then my probability of raising an extreme amount of money is large. And that's a thesis to be candid with you, that's a thesis that I've developed over a long period of time and I've successfully implemented 5 times, right? Doesn't mean the company is going to be successful, but with this company in the cannabis space that I started called Calaterra Therapeutics. At that point in time, there were two other companies on the planet that were actively developing cannabinoid-based therapies as medicine. Okay. One was a small company called Insys that a guy named John Kapoor went to jail for, and the other was called GW Pharmaceuticals that got bought by Jazz for $5.5 billion. I was the third one. I raised it 43 million bucks. I thought it was going to be a winner. It sucked, but so I think that it's kind of like when someone is a pure, gram level type of value investor when they're conditioned to look at value. I'm kind of conditioned from my life to be like, if there's 14 people doing this, I don't want to do it. Like it's just this, I don't know how to differentiate myself. If there's two people doing it, okay, maybe I got a shot.
Coming back to this, I think you're finding the overall market trend, but then you're finding the pocket in the market where there is like newness. There might be some excitement, but at the same time, it reminds me of like I used to work for the guy who invented PMI insurance, and we were doing mortgage banking, and we had a warehouse of $4 billion in the early 2000s, right? So not nothing to sneeze at, and we turned it over for what was it, $27 billion in loans every year. Yeah, it was a pretty good clip. We used technology to kind of, ensure that we could ever, recycle that warehouse frequently. But he had a knack for knowing where the big banks were going to be and then finding the pockets on the outside of that where retail investors and also not retail investors, where retail borrowers wanted their product and how to get that. And he was just really insightful for finding the fringe of the wave to bring like that regional bank into the position that they could actually, thrive there. And it sounds like you're employing a similar tactic of like, you understand the wider trend of what's going on in the cannabis space. But then additionally, like how can you play in that market is really about like finding that niche inside of it.
Yeah, I think it also just goes to like process as well, right? Like I've helped a lot of people to exit companies, right? And I call that the spaghetti on the wall process, right? Which is I'm going to take a bowl of spaghetti, cold spaghetti, put some sauce in it, throw it against the wall, and see what sticks. And I think if you do that enough and you have either the right relationships or you have a Sherpa who has the right relationships, if you get three or four pieces of spaghetti that are going to stick, you're probably going to get somewhere.
Yeah.
And that the combination of trying to, be where people aren't and use the wet spaghetti, process has worked for me. And I told you when we went before we met, I am not the smartest guy that you are ever going to interview. I am a dumb grinder, right? Like, I am just an old-fashioned sales guy. If you put me on a used car lot, I will beat every single one of your guests that you've ever had on, ever in the history of ever, because that's just how I'm conditioned. But it's just kind of about process for me, and if I do something once and it works, I'll try it again. If it works twice, I'm probably going to stick to it. And that formula has been, I think, pretty much the same in most of the capital raises that I've done, and in most of the companies that I've sold. So the other part of that, which is also interesting, I think, it isn't just about being where other people aren't when you're trying to raise money for a company. It's also understanding where market is when you're trying to raise money for a company. And I think kind of the third leg to that stool is like just understanding if market's here, if market's giving you this much money at a certain valuation, and there's six companies that have done that, don't be cute, right? Raise the same amount of money at the same evaluation, just get it done. And I don't know. It's just those couple of things have served me pretty well. So,
What would you? I know you've sold 22 companies, raised over $1 billion. What distinguishes the winners from the rest?
wow. Can I ask you a question?
Of course.
Determine the winners, right? Because there's there's two finish lines there.
Yeah.
Getting the transaction done for me is the win.
Yep.
Doesn't necessarily mean that they're going to be winners. So I would maybe ask you to refine your question because I think there's two different characteristics there, right?
All right. So let's start with the transactional winners, right? And then I would like to move into like how do we create long-term value in this marketplace?
So the transactional winners probably come down to two or three very simple things for me. Trust,
Mm-hmm.
awareness, and your service providers. So, most of the companies, and I've sold 22, 90% of the companies that I've sold have the following characteristics: private, less than two decision makers, little to no outside capital, generating revenue at a good clip, generating cash flow at a good clip, not a lot of debt, not a significant amount of complexity, under $100 million in entity value. Okay. So
Okay.
most of the deals that I've done are that. So, if I have their trust, that's the most important thing, because trust gets me mind share, and mind share gets me action. The other thing I think is, do you have the right service providers associated with it? And it's not just me. Do you have the right lawyer?
Yeah.
Do you have an accountant who's thinking three steps ahead about the maximization of your long-term value? Because I think most investment bankers, and I part of what I do is investment banking, but most investment bankers really just care just about the trade. They don't care about the maximization of that entrepreneur's long-term value. They also don't care, to the second point, about what's going to work for a successful long-term deal. So, I think trust service providers, and I don't remember what the second thing I said was, but trust and service providers are huge in terms of getting it done, for sure.
I've noticed a lot of times if I have the right lawyer on the deal, things move forward very gracefully. With the wrong lawyer, it takes 10 times longer.
Lawyers can be deal killers. So if someone hires me for any type of engagement where I'm going to have to interface with counsel downstream to get something done, usually the first question I ask is, who's your counsel? And are they the right counsel? And if they're not, I don't have a dog in the fight. But here's four people to talk to that I've worked with, and I know are going to be better, or at least not be an inhibitor to get something done. And a lot of times, to be honest with you, unless they hire one of my four people, I'm not going to take the job. just because I don't have 6 months to waste educating your lawyer that they're an idiot. I just don't. I don't. And look, I don't pull punches, right? Like you're gonna get my unfiltered view immediately.
Well, no, and I can appreciate that. And I think that there's a lot to be said about having the right team, not just on your management team, but with your service providers, like you were saying. Because at the same time, like anybody can kill a deal or anybody can speed up a deal. Like I had an accountant that was basically almost created a lawsuit in one of the businesses by how he was behaving in the during the transaction. So really unique experience. What's your advice to entrepreneurs? Like if you have one thing that you kind of like offer to people,
Under promise, over deliver.
it's so fucking simple. Love
It's
it.
so fucking simple. It's so simple.
Yeah.
Under promise, over deliver. The other thing that I think that, respect time, man. It's, again, I don't want to keep going back to LinkedIn. You have no idea how many people reach out to me on LinkedIn with an idea and help. Look, I'm a, I, I give money to philanthropies. There's several charities every year that I write a check to, and I have zero expectation of getting anything in return from them other than maybe a tax write-off and good things. Just go do good things, right? I don't need to tell you how to do it. Just go do it.
Exactly.
I'm not a philanthropist, bro. I'm a capitalist. And my time at this point is my most valuable commodity. So, what people don't realize is that there's a fine line between me being gracious and helping you and trying to convey to you some of my knowledge versus you wasting my time. And it's not my job to educate another group of entrepreneurs on how to be successful. When I do that, I'm going to teach a class, and you can all come to my MBA class. That's where but until then, it's not my responsibility. So under promise, over deliver.
Okay, so under promise, over deliver. When you make investments, what comes along with that investment? Are you just dropping cash, or are you like you have expertise, you have connections, you have relationships, you have experience that's incredibly valuable to entrepreneurs as well?
I'm going to let you in on a secret. I don't make a lot of investments. I do. I make some. Usually when I'm making an investment directly into a private company, it's as part of a larger cohorted SPV that has a lot of other people in it. And I'm usually doing it because I have an ulterior motive, which is that I want to be close to the company for some reason, and I think it's going to be successful. And specifically in cannabis, I have equity in 3 or 4 of the companies that I think are just going to be winners. And because I'm on the cap table, I think when the company goes to sell, I'm going to be the first person that they call. So my investments in cannabis are more call options than they are true investments. Some of my trading, I'm a deep value investor. So when I do make investments personally, I'm usually buying what I believe are significantly undervalued large cap public equities, and I'm buying yielding instruments. Like I'm 54. I think the single biggest component of my personal portfolio since the time I was 17 is Berkshire A and still is. So, I'm not a I'm really good at making money for a lot of money for other people. And when I try to make money for myself, it's comfortable mid-teens returns with not an overwhelming amount of risk.
That's nothing to sneeze at. So,
I like cars, so I for me, I think I'm much better at assessing the value of, like a numbers matching 1963 needing restoration Porsche 356B than I am, Nvidia stock.
I'm in the tech space, and I think I've probably missed a number of companies along those lines. Like growth stocks, not my forte as well. I think I definitely fit more into the value investor. And I found a lot of joy in reading. It was Margin of Safety was the book.
Yep.
Yeah. And that was nice, like nice classic thesis on value investing.
That is it. That is it in a nutshell. Actually, if you can find an original copy of that book, the secondary market in that book is extremely robust.
Last time I checked, it was about 3 grand for.
Yeah, I was gonna say that book sells for about 3 to 4 grand now.
Mm-hmm.
But that's kind of the school, the philosophy that I tend to ascribe to, personal from a personal perspective.
I love it. I think that's a great place to.
I can continue there. I also think, I mean, I've lit a lot of money on fire betting on technology plays that just didn't work. So, after committing, a couple 100 grand to 3 or 4 things that I thought were going to go nuts and didn't, I just kind of said, okay, I don't really need to do that. I also think, my biggest misses professionally from a liquidity or a total return perspective have been way, way, way worse than my biggest wins, right? So, I could probably tell you of 3 misses where had I not missed or had I timed it differently, you would not be able to find me. Gone, dude. Yeah, like I'd be in Joshua Tree with a 17-acre compound with fucking motions, motion sensors every 3 feet, and automatic. We can talk about guns. We could talk about AI, automatic guns. I'm kidding, but yeah, there's 3 misses that I've had in my career where I'm just like, oh, God. And I'm still on the board of one of those companies, so
Oh, okay. So what would have been the lessons that came from those misses?
maybe don't be afraid. I think as I've gotten old, in your 30s and 40s or your 20s, when you're trying to make whatever that mythical number is, and you look at empirical data and you say, oh well, I could make 500, four or $500,000 and just be done. That's fine. I don't think my life would have been precipitously different had any of those hits hit. But I just think it's just don't be afraid. As I've gotten older, and I think this has really served me well, I've kind of disassociated myself from outcomes. Meaning that when I was in my 30s and 40s, I'd be working a transaction, it would consume me, and it would be binary in terms of my existential place in the universe. Like if I get this done, I have worth. If I don't get it done, I'm a piece of dung. And I was so unilaterally focused on the giant exit and getting things done and somewhere in the last 5 or 6 years, I've kind of just been able to let go. And as I've let go of outcome, I've found that so many things are coming in. They're coming in without me even trying. So this kind of notion of disassociating yourself from outcome and allowing as opposed to forcing um, is a lesson that in the last 6 or 8 years, I think I didn't have when I had those misses. I was forcing. Right? I was forcing the outcome, and I was so hyper focused on forcing the outcome that I got out. Whereas now I would have been like, I don't really care. Let it go. One day you wake up and it's, oh my gosh, wow, that's nice, wonderful. Like that happened to me last year. I had structured a transaction for myself. Um, the stock went up logarithmically. Most of my compensation for this company was in stock in a public company. It did really, really, really well. Um, yeah, I made a decent amount of money on
Nice.
on that trade without trying to effectuate an outcome, without forcing an outcome, waking up one day and be like, is that like maybe I should look into that kind of. So it's been different.
That is a lesson that I would say hits me over the head every so often. I don't know. I had some spiritual experiences a couple years back, and it really kind of like opened up the eyes to self development, self growth. Always been a big fan of all that work, but I think like I mean, I'm in my mid 40s, so still in that phase of like growing and kind of like pushing through and trying to hit those mystical numbers, but at the same time knowing that if I force the outcome, it just pushes it away. And at the same time, if I'm always looking at the outcome, I'm not really just enjoying what's in front of me. And I think that is a big, that when I lose sight of it, the whole world kind of falls apart. And the universe just kind of tells me, like, you're fucking off again.
Right.
And at the same time, if I just allow and just be with what I'm doing and enjoying the journey of it, it just opens up so many other opportunities. So 100%, I think that's absolutely fantastic of a lesson to be, sharing with the audience today. So thank you.
It's okay, Don. I think it also requires some catalyst. You're not just going to wake up tomorrow and it's going to happen, right? So you had an event, right? From the time I was 40 till the time I was 50, I got divorced and I lost both my parents, and my
Mm.
dad was my business partner for 14 years, right? So I kind of went through this gauntlet of like, oh my God, like, okay, I'm now a grown up, right? Like I don't have anything to fall back on now. I'm out here on my own. And somewhere through that gauntlet, and I'm not going to give myself a bunch of credit, but somewhere through that gauntlet, a couple of things got awoken in me. And, I also had a gigantic miss, right? Like probably my biggest miss ever. And I was like, there's more to it than this, you know. There's more to it than me grinding for 6 years to try and, own 10% of a company that I'm going to put on NASDAQ that's worth $300 million, right? There's more than this. And, I think you have to go through that level of pain or failure or both to get on the other side of that. But now that I'm there, and I hate to use this, but I almost feel like I'm a magician because I'm just like conjuring stuff, and it's like woo, woo, and what I had said before about trust, like I'm gonna get into an engagement or I'm gonna get into a company and I'm gonna say, here's the three things that no one else is gonna tell you because they're true, and I just don't care. So you can either listen to me and you can address them or change them, or you can fail, right? And if you don't want to listen to me, that's fine. But here's what's going to happen. In 6 months, you're going to come back and you're going to say, oh my God, how did you know this? You were so right. And it's not that I'm smart. I've seen the movie 18 times. And the movie ends the same way 17 times. It didn't end the same way the 18th time because I fell asleep, right? So it's not that I'm a genius. It's just I've seen all of these companies at these same stages of development, for 35 years. I mean, we screen 800 companies a year, so I've had more than 10,000 reps. Right? It's like, okay, it's here it is. Take it or leave it.
Natural laws playing out.
Yeah, and one more thing, and just to loop it back, right? In all the other verticals that I've served in life sciences and in wellness and in CPG, those are established and entrenched industries that have 25 or 30 years or 40 years of data and service providers and institutional capital around them. You're in year one, basically, of cannabis. Like you're in 10 years into cannabis, but you're in year one. So I walk into a meeting and I'll tell the CEO, well, these four things are going to happen. They're like, well, that can't be possibly right. And how would you know that? And 6 months later, you're like, oh my God, everything you said was right. So also, like, the interesting thing about cannabis to me is that the nascency of it permits fascination in the people that I work with, because some of the things that I just say become truth, and there's nothing special about what I'm doing. I'm just relying on like 35 years of experience that they don't have. So it's been fun.
This will be a good quote to end on because it's, what is it? Those who don't know history are doomed to repeat it. And it seems like you've become a good student of your own history in the space that you're in to be able to provide that wisdom.
Trying, I'm trying.
That's all we're trying to do. Seth, man, I gotta say, thank you so much for this conversation. I've really enjoyed it.
Thank you.